What up, builders? I'm back. It's Kezio. Time to read and react. Let's go. Now, right here, you see the picture on the screen. Warren Buffett. He did something really important recently that I think, as an investor, somebody who's trying to build wealth, you could learn a lot from it. So let's look at the headline. Here I'm on Business Insider, and it says Warren Buffett's selling stocks. Warren Buffett selling stocks like Apple as he sees trouble ahead, but he'll spend if markets crash. Okay, this is what an elite strategist said. So Warren Buffett is cashing in on stocks like Apple because he knows the good times won't last. But they say he'll spend big once disaster finally strikes. This is according to a veteran strategist. You'll see his name down below. This is what he said. Quote, he's still, he's selling out of one of the most overvalued stock markets in history at the quote unquote high. And once there's a serious correction or recession coming, I'm sure he will, as he always does, start redeploying cash, okay, redeploying those assets right back into the market at much lower prices. This is according to, this was a statement from a man named Paul Dietrich, and he told this to Business Insider. So he's an elite strategist in the market. B. Riley, Wealth Management's chief investment strategist, was referring to Buffett's Berkshire Hathaway selling more than $17 billion of stocks on a net basis last quarter, okay, which was the January, February, and March of 2024. Its biggest 3-month disposal in years. So that's a big deal. This is like, they don't, Warren Buffett, anybody who knows anything about Warren Buffett, when he buys a company, when he buys shares, he does it to hold them forever and just continue to build a position and increase his position. So for him to sell stocks, to sell especially this many stocks, this many shares, that's a big deal. Like, he's signaling something to investors and to he's kind of showing his hand on how he feels about the market overall. Berkshire offloaded 13% of its monster stake in Apple, which accounted for virtually all of the sales that they made. So the majority of the sales that they made in the first quarter of 2024, the first calendar quarter, was from Apple shares. Okay, so let's bounce around here. So Dietrich told Business Insider that he's been a Berkshire Hathaway investor for more than 30 years. Most of his clients' portfolio contains Berkshire Hathaway stocks. He also read all of Warren Buffett's annual reports and many articles and books about him. So in other words, this man, this strategist, knows a lot about how Warren Buffett moves. Hey, this is a good point right here. Dietrich underscored that as a value investor, Buffett prizes underpriced assets and avoids expensive ones. So Warren Buffett avoids stocks that he feels are overpriced or highly priced, right? As opposed to what they're actually worth. So as an investor, you should learn how to do the same, basically. Like, Warren Buffett is like our grandfather, giving like doing what they've always told us to do, following suit. And that is buy low and sell high. That's the name of the game in the market. You don't need a brain surgeon to know the last few months were the right time to sell out of the stock market and get out at the high. This is what this strategist is saying. So listen up, viewers, and listen up, folks. High prices and other sellers. All right, so the benchmark S&P 500 stock index has surged 26% in the last 12 months and 73% since the start of 2020 to trade at a record high level. Apple, which remains Buffett's largest stock holding by far, has more than tripled in value since he finished building the position in 2018. Okay, so it's gone up so much, like eventually, something is bound to happen in the opposite direction. Now, it could come back later on, right? A year from now, 2 years from now, whatever. But anybody who is following the economy, with the amount of debt and that is increasing amongst businesses and individual citizens of the country, you could see credit card debt, car loan debt, school loan debt, and business loan debt. And then when those who have to re-up their debt, right, or redo their debt contract, when they redo it at 4 or 5%, as opposed to the 1% that they first got the debt at years ago, there's going to be a major shift. A lot of companies are going to go out of business. A lot of people are going to file for bankruptcy. It's if you're following the economy, the macro economy news, then you see what's coming around the corner. So what Warren Buffett is doing is kind of like it's like validating what I'm seeing already. This guy, Dietrich, this elite strategist, he pointed out that several of the world's wealthiest stockholders, including Amazon's Jeff Bezos, JP Morgan's Jamie Dimon, Meta's Mark Zuckerberg, and the heirs to the Walmart fortune, have sold shares in their companies in recent months this year in 2024, signaling they believe it's a good time to cash out. And another note, JP Morgan's Jamie Dimon, this is the first time he's ever sold shares in his company, in the company that he's the CEO of. So, man, he must see something happening crazy. So Buffett may be getting out while the going is good, but he'll be ready to pile back in when everyone else is fleeing. So when everyone else is selling their shares, when market contagion finally happens and everyone starts to panic, Warren Buffett will be at the door with cash in his hand, ready to buy everything in the store for pennies on the dollar. So as an investor, you should probably think about doing the same and building up a cash position so that you can buy ownership in these companies at bargain basement prices. That is the point of what is happening here, of what this article is saying. And those who are paying attention will benefit from it. Those who do not pay attention won't. Okay, the investor has repeatedly underscored the value of a huge cash reserve, not just to weather tough times, but also to strike deals on attractive terms and scoop up cut price assets during downturns when everyone's panicking and everything is on sale and everyone thinks the end of the world is coming. Warren Buffett will come in and buy everyone's assets off their hand that they don't want, and then 5 years later, he's going to own everything, and those people are going to be begging to get their assets back from him at 3 times the price. Buffett famously struck lucrative deals with a raft of companies during the Great Recession in 2008, 2009, including Goldman Sachs, he bought for pennies on the dollar, General Electric, Mars, Harley Davidson, and Dow Chemical. And then I remember he also loaned Bank of America money too. And then they gave him convertible notes or convertible preferred stock that he was able to convert into common stock, and he made over $5 billion or something like that, or $25 billion. I'm sorry. And then I think he spent $5 billion on Goldman Sachs. So yeah, this has worked before. So if you pay attention, maybe you can benefit this time and learn from one of the goats of investing. All right. So yeah, stay tuned for my next Read and React episode. Like this clip and subscribe to my channel. grow with Kezio. Then click the bell for notifications if you want more from me, Kezio, when it comes to wealth building and the world of finance. Peace.